What is good, NIO family? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only NIO stock and what you should be looking after for the future. I'm also going to break down what the overall setup is telling us about NIO and why there is likely going to be a little bit more downside to come once you see how this is playing out. I'm also going to break down some important data that came out that is giving us some new signs about the market and the economy and what else is going on in the markets that is a big red flag. Now, before I break anything down about NIO, before I get into any more details, I have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 5 free stocks, each worth up to $3,000. And the best part is, any could be a free NIO share. It's a limited time offer. The offer ends in just 2 weeks. With that out of the way, let's get on with the video. NIO is down 6% for the day. It did end up coming down pretty hard. I want to break down this overall setup. And one of the things I noticed was there was a potential head and shoulders being developed right here. We had a potential left shoulder, the head, and then the right shoulder. And I mentioned to you guys, I did expect NIO to either trade a little bit sideways during one of the days, then see some major or somewhat significant downside after that. And that is exactly what ended up happening. Now, I mentioned to you that the key level was $11.80. If NIO broke below this level, and we do actually have a gap here, so there is a chance it could try to come up, but then it's going to depend now on the overall market, in my opinion, and also the news. But now the market is going to likely play a bigger role. So NIO came down, showing some relative weakness. SPY was not that down. It wasn't even down that hard. Tesla was also green for the day, but it also came down with the market, at least to some degree. So what happened was we broke below this 11.3 area, and now we're getting very close to 11 flat. And we happen to have a gap right around this 11 flat area, so it is going to likely try to get down to fill that gap. And we might try to see a bounce between there and 10.8. Just very important to note. But I want to break down what happens in the market, how this is affecting NIO. Some very important unemployment data came out, and unfortunately, and I don't really want to interpret this in a good or bad way, because technically low unemployment is good for everyday Americans in a sense. We do like to see, as less people unemployed as possible. We want people to work, to bring money into their households and etc. But at the same time, the market wants pain, right? At least the market implied that. And right now, this could be interpreted differently because things could be very ambiguous in the markets. Seeing high amounts of jobs and low unemployment is technically feeding the whole, soft landing narrative. But at the same time, it's also not the best for the market in a way because the market wants pain technically. The market wants to see less of these jobs. We want to see higher unemployment. Instead, unemployment was the lowest we've seen since the 1960s. So it's kind of like a mix of two worlds. We also saw huge hiring in a total of 517,000 jobs. But if you look at part-time versus full-time workers, the majority of the jobs that we actually saw for the month of January were part-time jobs, suggesting that a lot of Americans are getting part-time jobs. It may be because of the fact that many Americans are just struggling because of inflation. It's really making their spending power much lower, and they're trying to make more money as a result of that. That could be one of the biggest reasons. There could be other reasons too, but I don't really see this as much strength for full-time jobs. We're actually on a bit of a decline, at least a downtrend since the rate hikes started right over here, going into I would say around May time. So just wanted to note this. Looking at some more economic data, the unemployment rate, once again, is the lowest we've seen since the 1960s. Not necessarily a great thing. We want to see more pain because what's happening is if more people are coming in and getting jobs, there's likely going to be more spending. When there's more spending, we're not seeing demand go down the way the Fed may want it to. So seeing that and other pieces of data suggesting that gas went up, lumber went up, copper went up, not to mention food went up, like eggs, for instance. There are many signs pointing towards a higher than expected CPI report the Fed might have to be more hawkish because of it. Looking at NIO, that's some pretty nice volume for the day, 55 million in terms of the number itself, but we're going to likely see an increase in the short volume percentage. And I also want to note that the relative strength is coming down. We're seeing a lower price pairs ratio coming down again. Not the best of signs. NIO is showing some relative weakness compared to the market. Another thing that's worth noting is the fact that Mondays are also not the best of days. And looking at the short interest, we got a nice increase in the short interest. We had about 4 million shorted shares, and it went up to about like 7.5 million. So that's over 3.5 million shares were shorted just over the last 2 days, and just one day, actually, as recent as Monday. And the shorts are definitely starting to pile in. So another 3 million NIO shares ended up getting shorted. That in turn is part of why NIO came down, not to mention the overall market. So what's going on for the future? I don't really want to talk too much about NIO specifically, but I want to talk about the trend and how it may actually affect NIO. One thing that's worth noting is the S&P 500 and the QQQ do have a tendency of being correlated in this market. I can actually show you guys. I can maybe show you some other day, but they do have a tendency of being correlated. Both the QQQ and SPY are down. The Nasdaq and SPY and the S&P 500 are both down. But as they're correlated, they are also inversely correlated with the dollar, right? That's commonly known. And I'm saying this because as the market has been popping, the dollar has been dropping very hard. And this is important because the dollar has been on a major downtrend since October. And look at how SPY has been on this uptrend since then. I'm saying this because now it's like, okay, we're on this uptrend, we're pushing up, that's awesome. But now the question is this uptrend going to last? And then when you look at the dollar, you see this as a red flag. The dollar index on the daily has been respecting this nice downtrend, this falling wedge, and we just had a breakout out of it today. So we will have to watch this for confirmation. If this thing keeps pushing up, is it going to be just like one of these like 3-day pushes up where it comes right back down? Or is it going to keep going? Because if it keeps going, we start to see 405, 406, 408, and etc. Man, the S&P 500, the QQQ are likely going to see some downside. This could also drag NIO down. Once again, it's just a very important warning I have. We need confirmation first. I just wanted to note this. Please be very careful, especially because CPI just happens to be less than 2 weeks away, maybe like 11 calendar days away. That's less than 2 weeks worth of trading days, right? Pretty soon. I could actually calculate that. That's actually about like 8 trading days, I believe. Like, no, it's like 7 trading days from now. Only 7 trading days left until CPI comes out. And CPI is going to come out on the 7th day. So technically it's 6 full trading days, then CPI comes out. This could shock the markets. And if the dollar keeps rising, that could be like one of the hints that are coming out, suggesting that we have some pain to come in the markets. Am I promising all of this? No. The dollar could still come falling right back down. But if it keeps pushing, be prepared. That's what I have for this video. I wanted to keep it short today. Thank you all so much for listening. Have a very awesome rest of your days. Enjoy your weekends. NIO to the moon because the long-term future is still very bright. And peace out.